Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 4th of March. All right, now as we come into the start of the non-farm payrolls week, we've got a few interesting things developing now. We've just made a few updates here to the MyFX Trading Hub. So let me just sort of run you through what we're going to look forward to at this stage. Now, today's market trading conditions, well, the majors are still sort of drifting sideways, majority of them. Right? There's still no clear US dollar direction. And the rest of the currencies are sort of just waiting for something to happen. The core market drivers, we've got a bunch of geopolitical situations. Obviously, the China-US relations, Trump. Now, there's a few other things coming out. There's another probe into Trump obstructing justice in the US that could escalate. And of course, we've got Brexit continuing. So that's why it's a little bit tricky, because if the main drivers of the market are the core, the geopolitical issues. Okay, so when you're coming back across to really piece it together, you know, what we've done is just added to the chart here, the technical outlook, as you can see now, and you're really looking for the fundamental aspect of these major currencies to come into play. Now, the top part here, major currency pairs, and the bottom part, just the major currency itself. Now, to me, the Aussie's probably the clearest trading opportunity in the sense that it has fundamental direction from the RBA, and also we have a sort of downward moving sort of sentiment in the Aussie. Now, short term, technically, this is where you can sort of get a little bit caught out if you are sort of focusing for trading. Like dollar CAD, popped on Friday, weaker GDP numbers. Saw dollar CAD scream to the top side. Also, a weakening oil that's led to that higher dollar yen. It's probably the one pair that's sort of moving with the sort of US dollar bias top side, really based on that a good outcome for those US-China trade talks. And of course, Brexit is sort of still at this point, even though it's waning a little bit, still driving sterling to the top side. So when I'm looking at the overall picture here, I'm sort of trying to match up. And this is the way we've sort of set this up. So you can easily see, you're looking for a match here from this top section with the bottom section, okay? That's where we've got the Aussie, and then really connecting it to the economic numbers up the top here. So you've got to really focus on what's coming out. That's where the driving momentum will come from. All right, so you look at the start of the week here, what we've got, well, the good thing is, funnily enough, we've got building approvals here for the Aussie dollar. Now, this is a blue release, so you can actually hold positions through this. The building approvals, the housing market in Australia at the moment is very on a sort of razor's edge. So any sort of weakness here, you may see the Aussie sort of roll over. And then as we go through the week, I'll just give you a bit of an update on the whole week. It's pretty chunky, and we've got a lot of central bank activity as well. So you're coming into really focusing on the real high impacting stuff, and that's definitely the Aussie GDP figures Tuesday. That's going to be followed up with the RBA. Now, any sign of weakness from the RBA will go heavily towards that fundamental picture downwards, and that could give us a really nice, much bigger trending trade on the Aussie lower. Coming to the US on Tuesday, the ISM non-manufacturing numbers. Now, the manufacturing numbers that came out Friday were just slightly weaker, so you're looking for a connection there with the US dollar, either, whether it's stronger or weaker. Friday's numbers were weak, so if we get weak numbers here, we may start to see some outlook here on the US dollar sort of weakening. But we'll have to wait and see. Then you got Carney, the Bank of England governor speaking. You got the RBA governor speaking, and then we've got the Bank of Canada interest rate decision. Now, no change expected on that, but we may hear some interesting comments. That's what we'll be waiting for from the Bank of Canada governor, Pollers. Then once again, we've got downward bias on the Aussie. So Thursday retail sales definitely well worth a look. The ECB, they've already sort of highlighted, or Draghi had highlighted, weak growth last time. It's going to be really interesting what he has to say in his press conference 45 minutes after that release. And then obviously on Friday, as you get into sort of Thursday's trading, we will get into the heavy-hitting employment numbers. Once again, it's a bit of a shame that the Canadian numbers are coming out at the same time. They do get overlooked somewhat, but the US non-farm payrolls, now this is one number that can really give the US dollar direction. So hopefully we get a clear result. Now, the trading opportunity around that event could be quite chaotic, But at least if it isn't, the numbers do line up, then we may see the US dollar really come in with some clear direction and go from there. But my biggest concern is at this stage of looking at the trading week, it's really revolves around Trump and this US-China situation. Now, if I just bring you over to the news, you can see basically it's all over the place. Like as in, there's so much, it's being built into the market somewhat. Here's this probe on Trump, obstruction of justice. You can expect that to sort of grow as well. But if you're looking through the Chinese situation, US Trade Representative issues notice of delay of the next round of tariffs. So the US are gearing up to delay the tariffs. And what that is doing is it's seeing a bit of a massive appreciation in the yuan, okay, the offshore yuan. Now, if I just show you the dollar index here and the offshore yuan itself, you can see Monday morning is a massive gap in the market. Now, this is a lower yuan, which means it's sort of like there's a good announcement coming out for China, right? That's what you would expect, especially a massive gap like that in the market, probably 150 points. We'll have to see how that plays out, but there must be some news coming out, or it's just the news on that US trade representative saying that the tariffs are going to be rolled, or not rolled out yet, because it looks like they're coming to some sort of agreement. The dollar index has sort of appreciated, but really over the big scheme of things, it's still sideways in a much bigger range. So I'm not like getting overly carried away here on the dollar index. It's still got a bit of work to do. And then when you come back to look at the general technicals, okay, we've got some trend lines, good trend lines building up on most of the major pairs. What we are sort of really focusing on, because Aussie's got direction, I'm looking for the Aussie potentially on a chance to get into a trade up towards 71.20. The Aussie building approvals today may give us that opportunity to get short. Once again, you've almost got to wait for news to come out about China. Now, if that move on dollar yuan, okay, that big move down, that should support a higher Aussie and higher Kiwi. So just be careful Monday, get rushing straight in, because the news isn't out yet about China, or any fresh news for that matter. Now, Kiwi overall still sideways, Euro sideways. Sterling at the moment sideways, been an upward bias. Dollar CAD, bit of a mix-up on the data there. So weak GDP numbers really takes the Bank of Canada off the boil, and a lower oil also sees dollar CAD sort of move to the top side. Now, that's just moving higher technically, but fundamentally it's not really doing much at all. And dollar yen is enjoying the blue skies at the moment, just sort of cruising to the top side as well. So, we've got technical levels and trading is a little bit normal, but, we're still waiting for all these major currency pairs to kick in. And generally that happens when the US dollar gets clear direction, or if there's something very clear out of another central bank. So when you do come back to look at the overall picture here for, where are the good opportunities this week, come back in and have a look at the upcoming FX events calendar, and I'll just get that up for you. So basically what we're looking for is, a bit of a connection here where the big major impacting data is. So if you come back down here, building approvals, GDP, well, GDP is big, but the RBA interest rate decision and statement has to be a very key release this week. Of course, the central bank governors speaking, and then you've got the Bank of Canada as well, then the ECB, and then the US non-farm payrolls to finish it off. So we've got a lot of big potential stuff. The trends come from central banks. So we've got lots of central bank activity this week, and central bankers speaking, important ones. So that's where the moves are going to be. So, like, to me, Monday, do you rush into the opportunities? Well, not really. Okay, it's a little bit tricky. You're waiting for the news to come out from the weekend. This building approvals Monday, if there's big variance, this is like a really low tier number, right? Usually doesn't impact at all. But because it's a sensitive part of the market, it could really impact. So make sure you tune into that. There's nothing else I can see really coming out that's worth any sort of significance or worth mentioning. And then we come into Tuesday. These building approvals may set us up for some big opportunities. This GDP number is a quarter on quarter, and then you've got the RBA. So to me, start of the week, Aussie dollar and Aussie crosses are in your crosshairs. It's got to be. That's where the action's going to be. All right, traders, that's it from me. If you've got any comments or anything about the updates, we will be hopefully rolling out the capital management dashboard this week, adding it to the MyFX Trading Hub. We've got some good updates there. Jump in the 247 trade zone if you want to give us some feedback. All right, guys, have a good trade week. We'll catch you later on. Cheerio.